What's going on, everybody? Back with another video. Sorry for the delay. You guys, I actually did the video, but the video was too long, so it had problems uploading. But we're back with our macro outlook. Dropping this before the markets open in the US. Got another hour. America went back 1 hour, so now they're like 7 hours behind me. So still time before the market, the US um stock market opens. So forex markets are open, but not really nothing crazy happening. But before I get started, make sure you guys like, comment, and subscribe. And remember, ask questions in the comments. Let's keep this channel engaging. And yeah. So first thing, the giveaway. I tried to do the giveaway. I asked Grok to choose the winners. It didn't work. I don't know why it's not working. So I am gonna try and get those giveaway winners out. In the video that I did before, I actually tried to use like this Twitter website that chooses people in the comments, but that also didn't work. So I'll probably have to just like go through and see everybody that qualifies and then put all of the users in Grok and then tell Grok to choose the winner, something like that. But we're gonna announce those winners this week. Now, let's kind of recap where we ended last week with markets. So we saw inflation pick up in Australia. Pretty much the rhetoric around that was that kind of was expected due to the whole global markets with Trump tariffs, with the whole winning the elections and tariffs going into effect. So that actually affected Australia. Now the question is that enough for the RBA to cut or hold rates this week? Now they have been cutting because inflation did start to fall. But then it kind of jumped back up and then it started to fall again. So they were cutting and then they stopped. But now with the labor market weakening in Australia, if that's a sign for them to cut for maximum employment, then the central bank may lean that way. But I wouldn't be surprised if they hold this week and then the rhetoric around the whole is that labor data that follows in November, because we do get a lot of labor data, I think, next week for Australia. So the CPI could just be the peak. And AUD USD has been trading low for a while now. I've been shorting it for a while, but that was a nice correction on the sentiment driven by the CPI data in Australia last week when you look at it from a technical point of view. So if you're on my YouTube, I dropped some calls to short AUD pairs except AUD JPY based on that sentiment. So that's pretty much what happened over there. In the US, we saw some push up in manufacturing and consumer confidence, which, I mean, I don't think the US economy is really weak. I just think it's stabilizing. It kind of overheated. It needs to come down. And now I think they're going to let it overheat now because the Feds are pretty much pulling back from rate cuts at the moment, like Powell just said it. So we have some Feds that speak today and more this week. So we'll see what that rhetoric will, if that rhetoric will follow Powell. Pending sales in America wasn't nothing. Canada cut rates as expected. Inflation is still up there and they're cutting. I think that kind of makes sense. I know it doesn't sound textbook appropriate, but it kind of makes sense. Canadians are burnt out. But they still have some growth there. Like they're not that weak. The economy isn't that weak. Feds cut rates as expected. Like I said, Powell pretty much for guidance was, hey, the December cut don't look right, especially if the government shutdown ends, which I think that's gonna come soon, and then we get PCE, NFP. If all we get all of that this week or sometime in November, and that data comes out strong, that won't look too good. Well, it'll look good for us, but it won't look good for a lot of people. Japan held rates last week as expected. I mean, We saw them following that interest rate decision Friday. They ended up with high inflation and a weakened labor market. So unemployment rate went up, inflation also went up. It just doesn't look good for Japan. And Canada, like I said, GDP down. That's why they cut, but it also was also revised up. It's kind of been holding up. So now this week we have Swiss CPI that's actually about to come out on this live. We'll see how that play out. But they're expecting a little push up in inflation there. I don't know. Expect what the market expect, but I wouldn't be surprised if it comes in worse than expected. But we'll see. I don't think it's gonna really shift the markets or any analysis, but it may cause some consolidation in that CHF market, USDCHF. But we'll look at that too. We get some ISM data, manufacturing data. Market's expecting to push up. We'll see. Australia, like I said, interest rate decision this week. If they cut rates, if they don't, it's more about what they're planning to do going into 2026. It could be they're going to continue to cut, especially if the labor market weakens and if that rise in inflation was like the peak and then inflation starts to fall. Because if the labor market weakens, then obviously inflation is going to have to come down because people aren't going to be able to pay those high prices. So businesses will then start to drop prices to meet consumer demand. Supply demand, that's how it just works. We get some labor market data this week if the government opens. If not, data will just be prolonged and the feds will continue to make decisions quite blindly. So hopefully this government shutdown is over and done with so we can start getting this data to kind of gauge what's going to be the next direction. But yeah, then we have UK interest rate decision. They are expecting to cut, which I think they probably will. I mean, I'm watching that GBP because we got in some shorts and that bad boy is in some deep profit, but we may get an opportunity. There may be a correction or it just may continue to fall because it is overvalued for sure. And we have some more Fed speakers speaking this week. We have Lisa Cook and Daly. Let's go look at the US only. So we have Daly and Cook speaking, and then Bowman. Some solid. It's a solid week for the Fed members to speak, and I wouldn't be surprised if they follow the narrative of Jerome Powell from the last week rate decision. Now, moving on. Let's look on the news just to see what's out there from last week. There was something that caught my eye right here. This article actually was crazy. Oh wow, that CPI. Let's look at that CPI in Australia. That boy came in super hot. Yikes. Let's see. Let's look at that bad boy. Oh, I told y'all, it came in nasty. Ah, I kind of figured that though. Like Switzerland is, come on now. It hasn't even really been doing well. It's been literally weakening across. So negative interest rates are definitely probably going to come in Switzerland. Europe is probably going to follow. That's just what's going to happen. You know, those USDCHF loans probably are playing out heavy, or we may have some little pullback. But going back over to this article in Japan. Geez, I just lost it. I think a lot of people think that Japan is going to intervene into the market, but with this new prime minister, I don't think they can afford to do that to their balance sheet. I don't see it I don't see it aligning with her political view, especially with her trying to push this whole stimulus. But the yen faced worth monthly drop since July as Bank of Japan disappoints. The Bank of Japan was heading for a monthly loss against the US dollar on Friday after BOJ disappointed traders hoping for more hawkish stance on future rate hikes, while Federal Reserve dampened expectations for a December cut. The yen clawed back some losses after Japan finance minister said that the government has been monitoring foreign exchange movement with a high sense of urgency as the yen weakens. So I think a lot of people are trying to play that like it's gonna be like this whole intervention into the market or whatnot. Japan stock market is doing amazing, and them not hiking rates, the stock market is going to continue to do amazing. Now, what's going on for the consumer? That's just the current state of the market right now. We're in that cycle where they probably are going to adopt a less hawkish tone on rate hikes. If they hike rates, they're just going to hurt the consumer even more. So the best thing for them to do is just sit on their hands, try and get wages back up, because wages are probably gonna fall into a freeze, and that's gonna be their biggest issue. Because the wages was keeping up the inflation, but even if the wages don't increase, inflation is still gonna take place, and people aren't gonna be able to keep up with the inflation, which means they may have to even cut rates again. So I just don't see an intervention. I don't see them dumping U.S. treasuries. I don't see that playing out. I mean, 2 years ago, yeah, they did it. They did it in 2023. They did it in 2024. But we're in 2025. I don't think third time's a charm for Japan. So that's how we're looking over there. But I'm watching UJ. I still think it has a ton of room to grow. And then also something about NZD USD. We do get some labor data out there. Forex.com dropped this article talking about how NZD's bearish bias strength is into key data. So pretty much, I want to talk more about the macro in here. So QE unemployment data looms large, while the U.S. calendar has some decent risks this week, as covered in a UJ analysis. The domestic calendar in New Zealand may contain the biggest source of volatility with crucial labor data for the September quarter. So we get employment change on Wednesday. They are expecting a jump, but that don't look surprising. Um, but if it shows like here, should this data release on Wednesday fail to show meaningful recovery in the labor market, it will increase the probability of the RBNZ adding to the 300 basis points of rate cuts already delivered this cycle. So they probably continue to cut. I think the labor market will continue to weaken. They're expecting unemployment rate to pick up. It's at 5.3. Rate cuts are going to come in New Zealand. More downside for that bad boy. It did have a nice little recovery run in that CPI data for America, which came in kind of mixed. So if you got them shorts, that was nice. I got a short on that rally. So that's New Zealand. That was pretty much it. Trump and China come to like a better trade agreement. But it's not a big win for America. I mean, the trade deal, I don't think that's what's really gonna. It's not gonna change the macro of the GDP growth of anything, especially in the short term. So yeah, that's pretty much all we have. Let's go take a look at these markets from a technical point of view. So let's actually start with USDCHF. Um, on the daily, y'all, we ate off of this bad boy. If you got them lows in from that USDCHF play from that 1 hour, if you was buying that bad boy took off. We was buying it below that 200 day. So we loaded up in that bad boy, running some nice profits. I mean, only thing we can probably expect maybe a back of correction if it does pull back, but I expect that boy to continue to go up. That's probably the support is here, so it can pull back to like 80.15. You can probably buy it again, but I wouldn't be surprised. My stop, if I enter this, would definitely be under the 200-day. Really on the monthly time frame, to be fair. But it's still low. Like that risk to reward. I'm selling this bad boy up here. Like one. So you're so low in that. It's a nice hedge. Okay. I really wanted to get it below here, but it looked like we were rejecting the zone. So it's probably good to just start adding some longs in now. But that's that bad boy. DXY. Um, I mean, we broke out of that range that we were analyzing since I started this kind of like these market videos. 98.77, I dropped on X, told you to buy below. So if you bought below, I mean, you're in some decent profit. Now, I would say this will be an area of retest, the 200-day on the 1 hour. So we may can get this pullback and continue this trend to the upside. So I wouldn't try to rush into the buys now. Like you're chasing the market as it goes up. Let's wait for us to get some pullback. That's that strongest level of support because we broke out of here and we never, like if you guys see right here, we broke out of that resistance and we still haven't came back to retest it. So that's a nice zone, and really all the way down to this resistance breakout. We came back and retested this resistance, but not really down here. So I think it's still a bit high to try to run into it. But if you zoom out on the monthly, I mean, you still have a solid risk to reward setup depending on how you apply your position size and your risk to that bad boy. But on the 1 hour, if you buy it now, expect some pullback. So remember what I told you guys in previous videos. How do you take advantage of drawdown if you're gonna do that? Don't be too greedy. S&P, I mean, still kind of trading sideways at that all-time high level, gapping, just consolidating. Nothing too crazy. On the monthly, I'm still waiting for the correction. Like I said, if you want to sell it, the risk to reward I think is in your favor, but you need to apply proper risk management. That's just it. Bitcoin, I mean, bearish analysis is still running. We started to reject. Oh, y'all, I shorted this over the weekend. If I would have dropped my last video, I literally said that it was going to short right there. I wish it was there. But from the last video, we still in that range. 106 is where I literally said in the video we were headed to. Jeez, I wish I could have dropped that video. But sure, we're going to break below that 106. And once we break below that 106, the next level of rejection is down at like 100. Like 101. So this will become our resistance. This will become our mid level. Oops. And that will become our new support. So now, I mean, I wouldn't try and chase this short, especially if you're gonna intraday trade. I'm looking for the path. Okay, here we go. Because we can bounce off that 106 and literally come back up here, and consolidate here before we break down to do something like this. Before we break down, you get. So, can you short it now? Yeah, if you're gonna leverage in appropriately to expect a pullback all the way back up to 110 or even to like 112. You get. So does it make sense? Is it also smart to buy it? No, because that can break and then correct back up to even 110. Or just may consolidate between 106 and then you stuck. So got to be smart about it. But overall, I'm still bearish. So I'll say if you're not in it now, it's kind of, I don't think it's too bad, because if you zoom out to the 6 month, depending on how you trade in this, the risk to reward is still in your favor if you buy it back down at like 26K. And I'm sure that November candle is going to end negative. So yeah, it's going to end red. It's going to be a bearish candle at the end of November. Let's go to that monthly. Look at it. We already had a bearish candle. Ooh, that boy looked like it's in free fall. Yeah, that don't look too pleasant for longs. Euro USD. I mean, this bad boy is gonna continue to weaken. We did break below. I mean, our shorts on that CPI work. We are getting like some corrections. I wouldn't be surprised if we can pull back to at least come back to this support that got broken right here. Somewhere like right around there. But then my stop would obviously be on that monthly time frame. But we probably reject that 200 day on the 1 hour. So, or even if we break a little above it, it's a better short. But on the monthly, we are still below the sell above level. So risk to reward is still solid, but I think we're in free fall. I think the shorts are the are in control in this market right now. The euro is about to weaken back down to like parity. So these highs, I mean, 119, 117 was nice. One even like 119 was nice if you got them shorts up there, because now you're at literally you sell at the top. GBP USD, this bad boy has been playing out beautifully from our last analysis. We broke our that support. Y'all, we are. So now this is what I was saying. There is a possibility we can pull back up to that 200 day before we pull back. So rally up, but I mean, this boy also can just continue to fall. So if we pull out to the 4 hour, we can kind of see where the next level of support is. Y'all, this looks like it's in free fall. I'm sorry. Unless we get a massive correction on market sentiment and we kind of pull back up to that support that got broken. But even so, I'll just start getting more shorts on these highs to because it's going down lower. But if this Bollinger Band on the floor, let's see where this is at on the daily. Is way below the 200. It's already below the 200 day. So yeah, we probably can pull back up to that 200 day and then sell off. Or, yo, we can just continue to fall. Cause look at this. Look how this rally. Like, look at this. Oh, look at this zone right here. This can collapse. Look at all of this. We literally are in. That can all be a massive drop, and it has done it before across 2 days right here. Whoa. And then that's when we get that massive correction back up. That's a nasty I would not long that from here. I just wouldn't do it. Nah, not at all. And I'm sure this at the bottom of the 78 point. Let's see. Yeah, right around the 78.6, right at that bottom. Nah, I'll have to wait till that fall a little bit lower. No, I won't even buy it yet until the dollar macro shifts. That's bearish all day. That's a trap. This is a trap of buyers that's buying that on the 1 hour. Yeah, that's a trap. Not at all. UJ, I mean, still playing out lovely. If you was watching this bad boy last week, we hit that 200 day on the 1 hour. I bought that bad boy, and I'm up on that entry about 200 pips already. Huh. Um, I would say expect a correction, if anything, in this market, or prepare for a correction. If it doesn't correct, then fire, but probably something like this if you want to get in it. Coming back down to that 200 day for sure, though, on the 1 hour. If you want to leverage in, kind of like what it did right here when it ran into that, it came back, I bought it. So let the trend continue to trend, but let's catch the pullbacks. If it tends to break out, I mean, it can just continue to break out and then it probably pull back to your entry on the retest and then continue. So it may do something like break out, hit that, booyah, and go up. So don't have a tight stop for sure. AUD USD, I mean, like I said, the shorts that we got up here last week was nice on that CPI, so that bad boy has been selling down. Um, just continue to sell. I mean, that's just it. If you look on the monthly, we've been selling this bad boy since like over here. So, like I said earlier in this video, when we was looking at the macro, this bad boy can fall all the way. My take profit is at 55.15. We almost got there with this drop, and then we rallied back up. But we about to at least go back down to 59.02, and then next is here before I expect a massive push to the upside. Or we can even pull down the touch like 46, but let's not get too ahead of ourselves. NZD USD, another one. I mean, it's just extremely weak. Been selling this bad boy since 70.51. Even on the 1 hour, those shorts from that CPI push up was nice. We sold it. Now we in profit. I think it's gonna continue to fall. And then UCAT, I mean, picking up strength, but still we bought it below here, 137. But on the 1 hour, I mean, you can't do anything unless you, let me delete this fib from these Bollingers, because this is that range that we was in. We broke that support on that negative CPI, which is great. You could have bought it, but still, again, on the monthly, it's still a bit high. So I said in the last video, the risk to reward is not great from the higher time frame. So it's not a trend that I would want to try to chase, to be honest. But not too bad. The Bulls are gonna win in this market because the dollar is the strongest thing. It's gonna be the strongest thing over the next couple of weeks for sure in this cycle. But yeah, that's pretty much all we got. Giveaway, we will do that. The winners will be announced. But if you saw my page, I tweeted Grok yesterday to choose the winners. It just doesn't want to choose anybody. So we'll figure that out. We'll continue to follow the macro for the week. And if you follow me on X, you'll see all of my updates there. But the midweek recap video would definitely come out. Now, biggest thing that may move the markets is going to be this ADP data if the government stays shut down. So, if this data do beat, which it can, it I know the numbers look a bit negative, like it look weird, but that's just all stabilizing. Look at this massive jump up we have from negative 33 to 104. So it just stabilized on the other 2 months. Another thing, I saw an article that has a kind of like a really thorough analysis on the US labor market, kind of like how I'm seeing the labor market. This Norwegian article, let's see if I can find it. Pretty much the Feds overreacted to the labor market adjusting to immigration and retirement. I want to find this article. Let's see. Geesh, can't find it. Oh, most recent. Let's see that. Ah, here we go. Found it 2 days ago. Wait. All right, hold on. I gotta look for it. This sucks. Really good article though. Mm, okay, let me try this one. No. All right, well, the article is here. Okay, let's do this. Let's put another game. Found it. All right, so this is the article. Pretty much it talks about how accurate is the assessment of the downside risk to the U.S. labor market. Pretty much the Fed has become increasingly concerned about the growing downside risk to the U.S. labor market. Demographic trends lead us to be less concerned about further deterioration in the U.S. labor market than the Fed currently appears to be. So, really good article with factual references that follows the rhetoric of the analysis. So definitely take a look at this. It definitely lean towards the dollar staying strong near term and the US economy holding up and other global economies slowing faster than America, which will make the dollar be the safe haven as it goes. But that's pretty much all I have for you guys today. Drop your questions in the comments. I will get to those questions in the mid market recap. And yeah, hopefully you guys are using this information to your advantage, because if you're following it with proper risk management, you should be up at the start of this week over the last 2 or 3 weeks. So that's all I got.